Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 29th of June. Let's go ahead and get started. Please pause your player, read this. It's important to you, it's important to us. When you get done with it, hit play, and let's continue on. The market model, if you're following along, went decisively negative yesterday. Overall, longer term, we were certainly in a downward sell the rallies type of thing. We did take the signals back in this area, but they failed. As you can see, I've called out some balloons here. If you're not aware of the model here, it helps keep us on the right side of the market more often than not. And I would urge you to come into the Discord and ask some questions. We were tracking this in real time yesterday, and it helped a lot of people either lock in profits or mitigate their losses. And it's a short-term signal on the white lines here, but there is a potential that this could turn into a medium or a long term. So we do believe in progressive exposure, and we talk about that. And I would urge everyone to come in and join us and learn a little about how we do this. Taking a look at the indices, the SPX, the SPY, the Qs, and the IWM all show increasing net negative gamma and decreasing net positive gamma. And when we see this, that's indicative of short-term puts going in and short-term calls coming out. And we see this across the board with the SPX, the SPY, the Qs, and at least on the put side with IWM. In general, your interpretation should be that we've got downside protection going in, and people are positioning for a potential drop. When we take a look at volatility, we did see some of the puts come out as they were monetized, and we moved away from that. We also saw calls go in, and when that occurs, that's playing to a downside in the market. Now, we don't think that gamma necessarily follows one-to-one with the VIX, but certainly we like to use the same tools to visualize it and see what we have. Yesterday was the last trading day for the current expiry, and you can see what rolled off here at 28. And so we've got another new week that starts today. The key takeaway for the VIX, I think, is that we are still locked within a range between 35 and say about 22, and we just want to keep an eye on that. Taking a look at the expiries, the SPX, the SPY, the Qs, and the IWM all expired today. And why this is notable is the black dot indicates where we closed yesterday, and you can see that we're below the zeros. This is a fairly significant shift from where we were yesterday. We're between some pretty dominant levels, and you can see that if we do drop below 3,800, moneyness changes quite dramatically. 380 for the SPY. You can see 280 here for the Qs, and you can see we're already below the dominant level here. When we see this happening in conjunction with a few other things, there is a potential for monetization and for a rally. I will note the structures here are fairly messy, and so I'm not expecting a lot of pressure here from the 0 DTEs, but just note the setup is there for some monetization. When we take a look at the index option, the change in open interest, we are seeing a fairly significant amount of puts being added to the complexes over on the SPX, the SPY, and here's the distribution. Note that when we see puts all the way down here, these are most likely short puts. They can be used to fund other activities up here, so just be aware of that. When we take a look at the Qs are kind of bucking the trend. The magnitude is still fairly consistent in the near term, but look out here now at the July monthly. We're actually seeing some puts being pushed out there relative to what we have here. On IWM, look, we had a closure of the monthlies, and we're actually starting to see calls open up, which I think is interesting, but the IWM has been bucking the trend and not very powerful in general, so we haven't seen a lot of behavior that suggests upside for IWM. Anyways, go ahead and play with these charts, and urge everyone to ask questions if the content's not clear. The structure going into today, overall we are seeing the true gamma zero and the true delta zeros drop. When we see that, it typically means that puts are being added, calls being closed, and that in general is indicative of timeline. Gamma is a shorter term phenomenon, delta is a little bit longer. Gamma being, of course, the change in delta. So when we see them both drop, That's important for us. We do pay attention to all of these. I will note the SPXA, TGZ, and TDZ are both moving down, and those are the monthlies on the SPX structure. That's a big animal there. That's probably 3.5 to 4 trillion notional. And when we see that type of money moving down, that's positioning for the longer term, as well as for a move downward. Taking a look at the 0 DTE, fairly strong relative to 0 DTEs. Expiry today, note all the negative gammas, or excuse me, deltas above us. We have negative gammas right here. The yellow line is where we closed yesterday. If we were to push further south in here, becomes very, very slippery under the 3800 level. You can see here at circle 5, 3760 to 3750 should be a key support area. If we're unable to hold that level within the expected move range, which is an open high low close range, we could actually push further south. So 3745 to the downside or lower is definitely possible. I do see we start to get kind of messy below that 3730 area. Something to pay attention to. Now to the upside, this 3850 to 3875 area, again a transitory area. I don't anticipate us pushing north of 3900 just due to the 0 DTE action. It could be other things that we'll talk about here in a second, but just be aware of these transition areas. They often can be good hiding areas. Now, that being said, we've not seen a lot of that lately. We saw it earlier in the year. Less and less the transition areas are becoming relevant on the 0 DTE. We think that's partially due to the SPY, or excuse me, the SPX now being available 5 days a week. The combo complex, which is composed of the AM and the PM settled options, a couple things going on here. Fairly strong bias to the downside here. That's a key thing I want everyone to be aware of. We're still up here at 4,000 for both COI, this is the call open interest, and the POI, the put open interest. These are huge numbers combined with a huge delta of 73 billion up here. It's going to make it very, very difficult in the SPX structure to push high up into and surpass that. I just don't see it in the short term. You can see I called out these delta levels. We've got stronger overhead, call it resistance or just a buffer to plow through than we do to the downside. You can see it gets fairly loose below where we closed yesterday. If we lose the 3800, when we get to about 3785, things get really undefined in terms of delta. That could be an issue. Note that the gammas get increasingly negative and some fairly big levels as we get down here. We're still down here at minus gamma exposure. Dominance is at 3,700. We think that's a big deal, so we want everyone to pay attention to that. The quarter levels and half levels on the way down to 3,700 are all in play. You can see where they're sticking out there, with the half level, of course, being the dominant. Also want to call out over here, 37% of the SPX. That's nearly, depending on how you want to calculate it at any one given time, is $2.4 trillion notional. Is set to expire between now and the July expiry. This is a fairly high number. Want to pay attention to that and what that could mean. So just track this, and we'll do it for you as we go through this into the July expiry. The SPX structure, we do think we're growing a fairly significant amount down here. I think it's important for us to pay attention to that. And then over here, on the summary for 629, I think a key takeaway is that the market models have shifted to cash. We think the opportunistic plays are to the downside. The long signal is closed. Cash is king. Puts continue to be added across the complex. Expect higher volatility. We do want everyone to watch the cues. They may be an island of green, meaning they may be trying to buck the trend here. We'll just have to wait and see how that materializes. The market model you can read for yourself. Downward bias continues. The Friday signal is reversed. The index, the wing charts are increasing in negative gamma. Puts are being added. VIX is showing upside addition to the calls, reduction in the puts, which is bearish, short-term bearish. The OI change is showing near-term puts are being added again. That's giving increase to the short-term negative gamma that we're seeing. The loss of 3,900 yesterday and the levels down to 38 show that our bias continues to the downside. We think that's important. We think 3,700 now is in play. The loss of that 30, 39, and the test of 38 is significant. Watch those quarter and half levels as potential pinning areas. And again, I don't think we can push above 4,000 any time in the near future. So that's it for today. If you like today's content, we urge everyone to come over to GammaEdge.us. That'll get you into the Discord. We've got these charts, a lot of visualization tools, a great group of traders, helping people understand this stuff and apply it to their trading. Follow us on Twitter, please, at GammaEdges with an S, and then here on YouTube. If you like today's content, smash that like button, please. Always appreciate that. And follow us so that next time we post something, you get notified. So with that, make it a great Wednesday, hump day, and we'll see you in the Discord.